Hey guys, welcome back to Sky Talks Trading. My name is Sky and I'm on a quest to invest, and I'm really happy to have you along. Today I am very excited to be talking about AMC, so let's hop right in, shall we? Let's start with some news that I'm pretty sure you're probably aware of by now. Wanda Group sells off most AMC Entertainment shares. So at first glance, some people might think that this is a bad thing, but I'm here to reassure you that it is in fact a positive thing. This is great news that Wanda has finally completed the exit of their position. This will mean much less selling pressure to worry about over the next week. For those who did not know, Wanda has been slowly exiting this position for a long time due to Chinese government influence on where Chinese firms should be investing. When we look back at March, when Wanda sold 21 million AMC shares, the price tanked $5.61 in 4 days. Today, Wanda revealed it sold another 30 million shares, and AMC has dropped from $14.67 to $12.11. So, when you think about it, Wanda sold these shares into the open market over a period of time where huge retail volume was on this stock. And we've also seen the short interest numbers from Ortex. So what does all this tell us? Well, Wanda's shares are likely majority in retail hands. So retail hands have the power. It's becoming very evident that selling pressure from Wanda stifled a large run-up. So now that they no longer have enough shares, they're not going to be able to stifle things again. So a larger percent of AMC is owned by retail, meaning retail are more in control of this company's future than ever before. Last week was surprisingly strong. A lot of people were expecting a total bloodbath yesterday. I was ready for this to be driven down below $12 to wipe out those calls. So we can only hope for the strength shown to give investors more confidence so that next week we can see a return to a nice higher volume. And also, I'm expecting the box office figures for A Quiet Place 2 to be really strong, and that'll be a good catalyst for a nice run-up. So now I want to go over a little data-driven theory that I came across, basically comparing the AMC situation today to the famous Volkswagen short squeeze of 2008. Similar to AMC's situation today, VW was heavily shorted by hedge funds during the 2008 economic fallout, when car companies were at the verge of total collapse. It's important to note that the 2008 economic crisis and the panic and the fear was at all-time high between September and October of 2008. The conditions that helped ignite the VW short squeeze was engineered by Porsche. Porsche was one of the major shareholders of VW. On the Sunday in late October, prior to the start of the squeeze, which was a Tuesday, Porsche came out with a statement on its shareholdings. Porsche said that from its current shareholdings of 35%, it was raising its stake to 42.6%. Aside from that, it said that it had 31.5% in options. The German state of Lower Saxony owned 20.2%. That combined stake totaled 94.3%. Porsche made this announcement to enable short sellers to quote-unquote close their positions unhurriedly and without bigger risk. This was a little touch of genius. By announcing its shareholdings, it publicly exposed that there were a limited amount of float available. By announcing its shareholdings, it publicly exposed that there was a limited amount of float available. At this time, the official short interest figure was 12.8%, which back then was suspected to be underreported. By revealing its shareholdings, the world saw the massive imbalance between the supply of shares and the demand for the shares. So, how is this all pertinent to AMC today? Well, it is relevant because it appears that the CEO, Adam Aron, that's the CEO of AMC, is engineering something similar to what Porsche did in 2008, but this will be of a grander scale and of epic proportions. So we're going to get into more numbers that support the idea that AMC will be the biggest short squeeze of all time that will be talked about for years to come. And I got to give credit to Review Dork on YouTube, who did the number crunching using pretty conservative estimates. So the short interest as of May 20th, according to Ortex data, 75 million shares not covered or closed out. For outstanding shares, there's 493 million shares, according to Bloomberg. Then we've got holdings. Retail investors, 63.9%, or approximately 315 million shares. We know from the CEO that retail own even more than that. And then we've got insiders, those who work for AMC and have shares. That's 7.3%, or approximately 36 million shares. And then there's institutional investors, which accounts for 114 million shares. So the total holdings reported is 465 million shares. We know that at least 75 million shares are shorted and uncovered, which is a big understatement. In reality, that number is actually way higher. So when that short interest is added to the outstanding shares, that is the float, the grand total is 541 million shares, which is in excess of 47 million shares over the float total of 493 million shares. So you can imagine how much more this excess would be when you factor in all the options, the naked shorts, and the phantom shares. So when we see short interest drop, we shouldn't worry. It simply means that these folks are covering and running for their financial lives, knowing that a tsunami is about to swallow those who don't cover now. So now, if you recall that the CEO said that he will make public the share recount when the proxies are mailed out. This is a warning being given to short sellers that their days are numbered. Without predicting when the AMC will happen, if history repeats itself, an announcement on the share count, similar to Porsche's announcement, can only help the cause. The announcement will likely reveal the existence of ownership way above the float. And this would signal to all short sellers that there is basically an eye of a needle through which a really large short selling, desperate to buy camel has to pass. And then when you throw in to that epic supply demand imbalance, the clamor for shares by those jumping in due to FOMO. So basically the point of this is to say to relax and not to worry about the price movement at this point, and know that data is on your side. If you invest 5,000, let's say, you only lose that 5,000. But hedge funds, on the other hand, they can go bankrupt, lose billions, lose their house, their career, their spouse, their income, even jail time. Speaking of jail time, Rich Greenfield, a man who put a penny price target on AMC after shorting the stock heavily, has been directly tied to the first SEC naked short selling lawsuit filed by the SEC. So yeah, he's under a lot of heat right now. I definitely wouldn't want to be Rich Greenfield. So that is it for today, guys. A short little video about AMC. Let me know what you think of the, Volkswagen AMC theory down below in the comments. I'm very interested to know what you think. Remember, to get to the moon, you gotta look to the sky first. Bye, guys.